Good afternoon, I'm Brigid Taylor and this is Currency Wars. A lack of clear direction from the South African leadership remains a major theme and is a clear risk to the country's credit risk profile over the coming quarters, as more funds will be required to plug holes within our ailing parastatals. Yesterday, both South African Airways and Eskom were in the headlines. This will place further pressure on either the taxpayers or the debtors domestically. The rand underperformed its emerging market peers versus the dollar yesterday, which comes in spite of constructive news from Eskom, where the power utility announced that it had in fact restored 1,500 megawatts worth of capacity at Majuba. However, the xenophobic attacks in Durban earlier this week, which spread to Johannesburg yesterday, are beginning to impact appetite for the rand. And that's as the xenophobic attacks speak of something much deeper within the economic fabric of South Africa. Whilst global investors might purchase South African bonds for the yield carry and equities for the exposure to well-run multinationals, there is a distinctive risk of diminishing appetite for structural foreign direct long-term investment in South Africa in the context of the xenophobic attacks. Meanwhile, offshore in Europe, the ECB rate decision yesterday confirmed that there's a more bullish growth and reflationary environment emerging in the Eurozone. This is positive for South Africa, considering that Europe is its major trading partner. Meanwhile, in the US, the rate hike expectations and the risk of capital outflows has fallen significantly. Data released from the US yesterday confirmed this after April's Empire manufacturing and March's industrial production both surprised to the downside. This pushes the December Fed rate expectations back towards their record lows again. Right, now that we know what the lay of the land looks like, I'm going to welcome my guest today, John Cairns from RMB. Thank you very much, John. So let's have a look at where we stand. I mean, we talked about this a little bit offset and just saying, you know, the global environment at the moment speaks to a stronger rand. So we're looking at lower interest rates in the Eurozone, although they're starting to show some form of growth. Fantastic. It shows us that we've got a trading partner that's starting to pick up. This offsets some of the China infrastructure imbalances. But then we've also got the US that's likely to keep rates on hold for an extended period of time. So that gives the rand some sort of respite. What is your view in terms of this interest rate yield carry environment? You were saying that you did a conference call recently where you were talking about how the rand's benefited against the majors on the back of what we've seen with regards to dollar strength, as well as obviously this yield carry. Yeah,
so overall the rand's actually been doing fairly well in the past 9 months or so. It's just against a very strong dollar that the rand is struggling. And Brigid, exactly as you say and as you know, yes, you've got the ECB now, Draghi coming out and saying more QE. You know, there'd been speculation that could step back from QE, but he said it's there till September next year.
But it's working.
It seems to be working. Fed hikes now delayed, this very weak batch of data in the first quarter. So yes, the search for yield will continue. And in fact, South Africa is doing relatively well out of that because remember, there are a lot of other central banks out there. There's almost 20, if I remember correctly, have already cut interest rates this year or eased policy like the ECB. The SARB's been on hold, so relatively we're gaining in terms of the carry.
So that's an interesting scenario. If we look at the South African economy, I mean, there was a little bit of criticism around the Reserve Bank not cutting interest rates when the rest of the emerging markets were doing so to support the economies. As it turns out, South Africa's growth is relatively benign, but are interest rate cuts really going to make any difference? Probably not. And we've talked about this before, looking at the trajectory probably towards the upside, if anything, out of South Africa going forward. So if we look at this interest rate environment, and specifically if you look at those currencies that have a high yield opportunity, so if we look at the likes of Turkey or other emerging markets, what are you seeing from your analytics in terms of what that means from the support that investors are giving towards those high yielders?
So there is an interest in carry again. The search for yield is back on. The whole basket, the whole carry basket, so Aussie, QE, CAD, Brazil, Turkey, South Africa, Hungary, Mex, you know, all the typical high risk, high yield currencies. We've all struggled with that strong dollar. But what is interesting is that of that basket, South Africa has done the best.
Okay, and what has given us that edge though? What do you think? Because I mean, we are a gold producer, as is the Aussie, as the Canadians are, etc. So that's a similar scenario. If we look at Turkey, we run a current account deficit, as do they. So what are the risk issues when investors look for high yielders? What is, how do they determine which are the better of the bunch?
Okay, so there's a number of facts there. The first is the yield story that we spoke about, South Africa on hold when a lot of others have been cutting. The second one is the oil story. So a lot of the high yield currencies, Aussie, CAD, MEX in particular, are oil exporters. We are a huge oil importer, so we're a relative gainer. Thirdly, just the story has changed. What the market is focusing on every day. Last year it was about deficits and Fed hikes. Suddenly now it's about who's cutting rates, who's gaining from oil. A story that's now suiting South Africa when last year's story didn't. And then finally, something that surprises a lot of people is that while our fundamentals may be bad, a lot of those countries have even worse fundamentals.
And even worse, you talk to us specifically maybe about some of our major competition, so the Aussies, the Turkish.
So maybe 3 countries to highlight, political crises ongoing in both Turkey and in Brazil.
Okay.
Brazil's economy is in recession, so our view at RMB is for 2% growth rate this year. Brazil's negative.
Okay.
Russia may be negative 4%. You think of Aussie, just think about what their exports are. Iron ore, coal, oil, all of those commodity prices have just been hammered completely. So in terms of the commodity movements, really much worse for them than it is for us. In fact, in the early part of this year, commodity movements were net positive for the rand because the decline in the oil price was so steep relative to the drop in the other commodities,
as you said. So that's better for our trade imbalance. But if we look at, so let's just quickly focus on the offshore scenario. So in South Africa, we do rely on our exports to the likes of China, as they do along most of the emerging markets, and specifically some of those that you've just mentioned, being Australia. I mean, Australia specifically will have found massive pressure from the deterioration from demand out of China.
Yes.
But we also export a lot to the Eurozone. So do you think that that's a good buffer at the moment? Do you think that that's going to compensate for the fall in the Chinese economy, that we're going to see this pick up out of Eurozone again?
Yeah, I think that's a good point. And you're right to note, for instance, the Aussie dollar is far more sensitive to the Chinese data than we are, and rightly so, given the relative trade shares. Also, when we talk about China, just to focus there a moment, let's just think what is happening in that economy. The one story is the slowdown in the rates of economic growth, which is bad for all commodities. But the other story is the switch in the nature of economic growth from investment and export to domestic consumption.
Brilliant.
So now, so it's terrible for the copper guys, terrible for the zinc guys, terrible for the steel guys, but it's pretty good for gold demand, it's pretty good for auto catalyst demand if consumers are going out and buying cars. So in many ways, there are positives from China itself that offset just some of the slowdown in growth.
Well, that's interesting, because I read an article earlier this week. They were talking about the Chinese or South Africa's deficit to China, because we obviously import a lot of goods because of the cheapness of the goods that we can import from a South African perspective, even though there's been a slowdown in this demand for the raw assets, so the steel or the coal, etc. How does South Africa position itself to close that gap? So in other words, what is it that would attract people in China to absorb more from South Africa so that we can close that trade gap?
It's probably not, I guess, going to be a market for any advanced products. We really continue to supply them with resources.
So it would be platinum and gold, effectively?
Iron ore, coal's more to the India side, but we do go to China as well. But the counterbalance really is what's happening in Africa.
Yeah.
So as you know, every corporate in Southern Africa is investing in Africa. I know you do a lot of work there yourself. And so we're running significant trade surpluses with Africa. That seems to be our growing export market, particularly for more manufactured goods. I don't think our manufacturers are really going to be able to compete and compete against the Chinese and sell in there, although there is some growth there as well.
There is some demand, as you mentioned, if they do pick up their vehicle sales, etc. So let's look at the South African scenario. We were looking at those deep economic issues. We talked a lot about, this week has all been about the xenophobic issues. There's the parastatal issues with regards to management, effective management. And I mean, I remember writing a report a couple of years ago looking at almost every parastatal in South Africa at that point. CEO had stepped down off the board. And this is a risk in terms of how investors view South Africa from an infrastructural perspective. Now, if we're looking at plugging holes, it's almost the medicine's too late. So what do you think in terms of how that's going to play out relative to the benefits that we're getting from the weak global economy?
Yeah, so we've got problems, governance problems, slow rates of economic growth, governance, particularly in the parastatals. All these issues we certainly need to deal with. Okay? What I'm just a bit cautious about is Yes, we must be gloomy, but we must be careful not to be doom.
Sure.
Okay, it's gloom, not doom. Okay,
Sure.
we still got positive rates of economic growth. We're still doing a lot better than other countries out there. And going back to your earlier comments, we're in an environment that's not a global environment that's not highly conducive to strong rates of South African growth. Our export partners are not booming. Global growth, the IMF saying 3.5%. It's really not boom times, and we're just a small open economy. We just catch the winds from offshore. You raised the issue of ratings as well, which in some ways is capturing a lot of these issues. Our view at RMB is we are going to see another rating downgrade this year. We're looking for Fitch to cut. But again, it fits nicely with the gloom, not doom story. Even with the Fitch downgrade, all of the three major rating agencies will keep us safely as investment grade. Doesn't look like we're going to lose that investment grade status at this stage.
Well, that's maybe one of the risks that we need to keep an eye on, and certainly we want to maintain that, because if we look at all the inflows that we're seeing, it's on the back of the fact that we're investment grade. Right, so now that we know where we stand, we are going to pull out the big guns and have a look at the lay of the land for the week ahead. Right, John, so now I'm going to ask you just to put some levels on the table for us. Let's look at those crosses, because they've been quite interesting in terms of your majors, as you talked about earlier, with that dollar strength relative to South Africa being, the rand against the dollar relatively weak, but not as weak as if we look at the Eurozone or other major economies. So just give us an idea of what we can expect in the week ahead.
Okay, so it's all about euro-dollar. Can euro-dollar, the downside, get going again? Can the great dollar rally of 2014 resume? So we've got to get through 104.50 on euro dollar. That's the big question for financial markets. If euro dollar can break 104.50, can go to parity, then we've got upside pressures on dollar rand, and you're looking for perhaps a return to the 12.50. Nice strong support comes in at 11.77 on dollar rand. Euro rand is more interesting. That's got pressures the other way. In other words, rand appreciation against the euro. There we're looking at around the 12.65 level will be the key one to break. I'm not sure we're going to get through there. More worried about a bit of the upside on dollar rand.
Okay, and what kind of upside are you looking at in terms of the dollar rand?
So at this stage, let's not run away. Let's not be talking to the 12.50 levels, but a return to the 12.20s, 12.30s if we get, as people expect, this resumption of strong US data after a very weak first quarter.
Okay, well, thank you very much. So in conclusion, the trading strategy for the week is look for the dollar to remain relatively benign, as the market has really priced in the interest rate outlook in terms of the Federal Reserve. So the rand sort of trading, if we see 11.75, a good level to buy dollar rand, otherwise potentially weakening up just above the 12 level, and if we do see the dollar strengthening up to about 12.25. But the real mover to watch is the euro rand, because that's where the strength lies. So for exporters, you need to take advantage of weaker levels. And for importers, hold onto your socks. You may in fact see as low as lower levels down towards that 12.50. So for now, that's the lay of the land for the week ahead. But you are more than welcome to send any of your questions or your comments to @CNBC Africa, #CurrencyWars410, or to myself at Brigid R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.